Hey traders, Raghi here, and in this update we are going to talk about trend, transitions, and time frames. One of the challenges in this market right now is just the contrast of market structure. So I'm taking a look at the S&P here. Now this was a trade from today that we took in the chat room, and that was a buy on the S&P. And it's been a monster buy and it's been great. But the interesting thing about the HPMR fade oversold with the stochastic that I took is that on the daily, I don't have any exposure. In fact, if someone were to ask me right now, even with the last handful of candles moving higher, Rog, what is your directional bias? It is still down. I can have an opinion about what kind of move I'm waiting to see, and that opinion is very much going to affect the kind of setup that I'm also waiting to see. I'm flat right now on the daily, but just about every inch of this move higher today, based on a 5-minute time frame, as a day trader, I captured. Okay. We go from a 5-minute to a daily, the market structure is going to be different. Therefore, the setup that I'm looking for is also going to be different. This is a neutral market trend, and I understand market trends can be, measured in a number of ways. But let me tell you the way I do it, and hopefully this is something that can work for you. The 8, 13, 21, and 34 period exponential moving averages are what I track. But what is unique in the way that I track the trend is that we separate the momentum, the MOMO, from the trend. Most traders, when they're looking at structure, just look broadly at this idea of trend. But we can also understand when there is bearish momentum, neutral momentum, bullish momentum, all happening within a neutral trend. And by the way, what I just described is exactly what we've seen through, thus far, most of July. The trend that preceded this neutral market that we're in right now was down. So that means my directional bias is favoring waiting for an overbought resistance level that is then confirmed by an overbought slow stochastic. That's what I'm waiting for. I've got the slow stochastic part. What is, for now, continuing to elude the completion of the setup is when the slow stochastic is syncing up with a Darvis, when the slow stochastic is syncing up with a minor high. Those are the things now, the actual setup, because we have the indicator confirmation, but an indicator confirmation is not a setup. Right? Now we're waiting for the setup. In other words, we're waiting for the price chart to say, yep, we've got the pattern or the level, and now that slow stochastic is already confirmed, already kind of green lit the trade, we can go. So think about it this way. Just because you're not trading overnight, just because you may not have overnight exposure, long or short, on a daily time frame, doesn't mean that every day you can't look for opportunities, as we did today, and day trade, and then start the next day flat. Let's talk about the longest of time frames. This sort of ties up the conversation that we had back on the 7th of this month, where I said, gang, the market is beginning the bottoming process. So on the 7th of July, I explained why macroeconomically we're likely not going to see lower lows, or if we do, they're not going to organize into downtrends. That is a very different statement than let's buy this market. That is, we're likely not going to be as interested in setups that require lower lows. It does mean that we're still likely going to see some chop, and that chop is going to be, for me, I will favor a short trade if, right, it even sets up. In the meanwhile, we have the weekly chart. Now, I would love to see movement back to the downside, not because I'm necessarily this uber bear, but because that would be the confirmation of an overbought daily time frame, sending us potentially lower into the zone on the weekly that I want to be a buyer of, right? That's the idea. Separating out 3 time frames, separating out 3 different market trends and 3 different behaviors. one of the things that I've noticed being a trader and observing, opinion about the market is time frame matters, right? Time frame also dictates time horizon. A 5-minute, that's my day trading be flat by the end of the day time frame. And when I look at the way in which I present these ideas to the mastery or to the Simpler Futures room, this is all about, hey, let's get in sometime before 10:30, get a day trade, and then be flat and start all over with a fresh set of eyes tomorrow. On the end of day time frame, the idea is, hey, let's find market structure, follow that structure with the idea that we could be in the trade from, say, a few days to a few weeks. And then we have the weekly, which is very exciting to me. In fact, most of my opportunities right now have been on the 5 and the weekly, where I'm looking to, in many ways, rebuild or add to positions at levels that I've been waiting for price action to revisit for, in some cases, the better part of a year or more. And this is where the setups get really exciting, when you can manage multiple time frames and their respective time horizons, where you can understand a 5-minute chart could be bullish and you can have a fantastic bullish day. But when you look at the end of day chart, the daily time frame, you're still waiting for an overbought short sell, which I actually am. If it occurs, I'll take the setup. If it doesn't, I will be patient enough to wait for my pitch. I hope this helps. This is the heart of what trading is. This is the heart of what understanding what different time frames are telling you about the market is. Don't paint a market with one brush. Know the time frame, know sort of the prism through which you're looking at the opportunity, and make sure your expectations in terms of long, short, and time horizon are aligned with that time frame. If you have any questions on this, because I know this is a huge topic, feel free to leave the questions below. I do check the questions and the comments and everything else. And as always, thanks for watching. Thanks for smashing that like button, and I'll see you all in the next update. Hey traders, Raghi from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.